Hi traders, and welcome to my video on the Marubozu candlestick pattern. Basically, Marubozu is a word that means dominance in Japanese. Okay, and this is a Japanese candlestick pattern that we are going to use to find entries in trends, whether that's a long trend upwards or a downtrend, a short trend downwards. Okay, so the Marubozu candlestick shows you that there is dominance from either the bulls or the bears. It is a candle where there's no wick or very minimal wick. So here you can see marked on the chart as a Marubozu up candle where the price opened at this level and closed at this level with hardly any wick. This shows that it was a completely bullish candle with minimal indecision, therefore a strong signal that the uptrend is going to continue and the bulls have control of this particular market. This is a dollar yen UJ 1 hour chart on the MT4 platform. Okay, you can I'm using a candlestick pattern detector indicator here to help us identify these patterns on the chart. You can obviously just use them by scanning manually for candles with little to no wicks. Key thing is with the Marubozu is to trade in the direction of the candle and in trends. This is how I like to interpret it. So we can see we have a clear uptrend here. Nice pullback. Probably if I was watching this, I would have already been in this trade. You do have a wedge pattern and a nice breakout there of this resistance level. So yeah, you may have even entered here on the pullback. You can see this line's been touched multiple times on the way up. We are on the 1 hour chart, which is usually can be quite reliable for support and resistance levels, as we see in this example. Once price has a breakout here, we do continue upwards, but for the purpose of this video, let's just focus on the Marubozu candlestick pattern. So say you had opened your chart here while you see lots of action going on. You want to perhaps risk buying quite high into this trend without waiting for price to pull back here because you like the Marubozu so much. Once you've seen the candle appear, you can enter straight away or just wait for your opportunity to pounce. But let's just say you did enter straight away. It wouldn't have been a bad trade. You just would have needed to have, well, I would have placed my stop loss below this recent support, either here or here with a buffer. I mean, this is why you don't always place your stop losses directly on support, because if you did here, you would have been taken out probably here, which is why it's nice to give it a buffer. Or if you want to give the trade more room to breathe, you can put it down here somewhere. Either way, you could have taken the long with the Marubozu pattern there, or you could have just kept it in mind, waited to see how the market played out and then entered on the breakout here. Okay, it's just one of many signals you can use in combination with other candlestick patterns, support, resistance, trend lines, and technical indicators. Just bear in mind that they can be lagging at times. So one of the things I like about the Marubozu, it does include all the price action there, so it's telling you what's happening at the current time. Bearing in mind, if you see these patterns on the 5-minute, 15-minute charts, they don't contain as much price data and thus may not be as reliable. That's why I like to focus on the 1 hour, 4 hour and daily charts, as I just find that the fact there's more data with candlestick patterns, even technical indicators, just signals tend to be more reliable. Okay, so you've got in on this trade here. If we zoom out, you can see it's not a bad trade at all. In fact, it's a very good trade. We've gone up here at least 300 pips. I mean, if you had your stop loss around here somewhere, I don't know, a 30 pip stop loss, I mean, that's not a bad 1 to 10 risk to reward ratio there. Of course, you're not going to be able to exit, well, you can. If you've got a crystal ball, you could exit there at that price, which would have been a fantastic trade, but it's not going to happen. Instead, you can watch how the trends are unfolding and use your price action analysis to time your exit. What you can also do is move your trailing stop, so as price is coming up, you can move it below. Once you've had this consolidation and price continues, you could move your stop loss up to here somewhere, even under here. Again, after this support levels formed here and price continues, you could move your stop loss here and just basically lock in profit, stop loss here, all the way up. So when it does eventually turn around and take you out, you've maximized the move as much as possible with your trailing stop. Okay. So that's an example of trading a Marubozu up candlestick. Let's see if we can find a down. I mean, this obviously would have been a dream trade. I'm not sure, I'll be honest, I probably wouldn't have taken that just because of this mess here. I mean, that's not a downtrend, so we can't say. You can blindly take every Marubozu if you want. However, more often than not, you will be getting chopped in and out of ranging or consolidating markets, which is why I like to first identify the direction of the trend, make sure the trend is established, and then look to enter with a Marubozu or other candlestick patterns and technical indicators. Let's just say, for argument's sake, you did take that. I would have put my stop loss up here, which would have been a good, very, very good trade of this bar here. But as I said, we can't win them all. So we did get the opportunity later on to come into this move. In fact, 1, 2, this was maybe too late, this one here. But as you can see, the Marubozu here and here. Let's just show you the candle again. Candle with little to no wicks, showing complete bearish dominance. Marubozu meaning dominance, as we said. So yeah, the trend is formed here. We've got our basic trend lines. This is a level from earlier, but we can just mark the support level there. You could wait for a breakout. As you can see, probably a lot of traders were doing that. Hence these two big bars that followed on once after the spinning top here. Everyone was probably eager to see what would happen here after this fake out previously, but we've got the trend line there. It's held up well, lower highs. We're in a downtrend. The price action showing us that. The Marubozu as well. Stop loss probably above the resistance level here, I'd say, or the trend line. And then yeah, that's if you were entering based on the candle alone. If you entered on the breakout, you were patient. Well, it moved with such force. I mean, if your stop loss was here, just the other side of support come resistance, you would have been fine as well. Either way, let's just say if you got in on the Marubozu, I had your stop loss here around 40 odd pips. Wow, okay. That is a big move. You would have been well up. In fact, you would have been 300 pips up had you held on. That would have been a good trade. The breakout the same, over 200 pips. Cool, so that's that Marubozu. If we zoom back out, the next one that's marked there. I mean, if we just zoom in on that, you almost have a double top candlestick formation there. Resistance once, twice. That came close enough for me. Neckline, which is basically the support level within the double top, and a breakout there. And you can see from that breakout, the support level there became resistance, and price continued downwards. So yeah, once you've seen this Marubozu appear, you can see price coming away from resistance, so you know that, okay, again, lower highs, there's still some momentum in this downtrend, lower high. You could have taken that as it is and put your stop loss just on the other side of resistance. 30 pips and, well, I mean, over 500 pips on that trade. So you can see that Marubozu, if you do pick it in the right places, it can be a very powerful candlestick pattern. But as I said, I wouldn't trade it as it is without these trend lines, support and resistance marked off. Keep an eye out for other candlestick formations, inverted hammer here, and spinning top, bearish one. There's, you know, other signals just for extra confirmation. Can increase your chances of picking a good trade. Do have arguably a wedge pattern here as well. You can see there, price being consolidating, squeezing, and perhaps that's why there was a breakout there. A few traders probably watching that as well. Could have got you in a few pips earlier. Again, stop loss ideal around here. As price was falling down, you could have used, say your stop loss was here initially. As price fell, it was around here, you could have moved it to here, lock in some profit. As it dropped more, you could have just moved it. Where you see areas of consolidation, just place it above. Okay, and then that last fall off there, here you probably would have been taken out, but by then we've exhausted the move. Yes, there's a Marubozu down here, still some gas left in the tank. However, you would have been better off buying. Well, that trade actually went down even more. That was a good example there, but you don't want to end up selling too low. You know, after all this action's already played out up here, you can still go in there, but you can see there's not much. Well, there's still plenty left, but just not as much. I mean, when you zoom out, it does make things look a lot clearer, doesn't it? I mean, support, come resistance here if you went it on this pullback, but that's a strategy for another day. Well, hopefully you found something useful in this video. I've tried to include not just the Marubozu candlestick pattern, but ways that you can time your entry after you found it rather than trading it blindly as it is. Please like and subscribe if you found the video interesting, and thanks for watching.